Thanks for coming, everybody. This is Chantel Treadway with Keller Williams, and we're here today with Next Matters Conversations. Our topic today is you don't have to be 38 to buy a home. Uh, with us today is our guest and lending partner, Amber Mahoney with Mortgage Rights. So thank you for coming, Amber.
You're welcome.
Awesome. So, what we're going to hit today is three things: the average buyer age myth, what lenders are really looking for, and simple ways to get ready faster. So, as you think about it, it really is a myth. So, if the average age is 38, I feel like there's a memo that we were all supposed to get that we didn't. I have people in their 20s that are buying, I have people that have been in their 80s. So, it really is just an average. And so I think what we have to consider more is where the buyers are coming from in their life stages. Are they starting a new job, doing a career change? Are they getting married? Are they starting a family? Are they going through unfortunate things like divorce and, different life stage events? Unfortunately, we have some that, they're downsizing, and that can be a very stressful time after they've lived a certain way. And so this could be all brand new to them after so many years. And so as we look forward, I think we need to just kind of consider where everybody's coming from, that it's not necessarily their age, but when it's the right time for them. So, Amber, I'm going to kind of turn it over to you for a little bit. So, as a buyer is approaching you, and let's say they're at any age level, what are you actually looking for as a lender?
As a lender, what we're looking for is typically a minimum credit score of 620. That we want them to have a 2 years employment history. And, if they're on fixed income or Social Security, that's their 2 years. If we've got somebody that's been in college and, now they're going into their new profession, the schooling counts as their 2 years. So credit 2 years and just qualifying. But yeah, with the ECOA, there is no age limit restrictions. So if you're 21 and you can buy your first home, or if you're 82 and it's your time, then we'll take it at any time. But I agree with you. I feel like maybe the national average is 38, but especially here in our local Kentucky, Indiana market, I feel like we're closer to the 25-ish, 20, maybe 30 in between that. But yeah, so income and credit. So I always suggest everybody, start small. You don't need big credit. You don't need a big car payment. You just need a little
Right.
secured credit card or something to start building on. And that'll be the stepping stone to getting things started for you.
Absolutely. What do you think, as people are intimidated to get started, what do you think can improve their credit faster than what they even think?
My philosophy is every individual, every transaction, every client, every customer, every friend is different. So, um, we don't charge for, if you want to call it a consultation, but an appointment. I would love to meet with people and just kind of set up a plan. If somebody comes to me and says, this is my 6 month plan, my 12 month, or even a 24 month plan,
Right.
we're going to be here when they're ready. But yeah, starting small, if life happens and there's always hurdles. So if you've had some old collections or something, let's take a look at it. And I am not a credit monitoring person. I cannot tell you what to do. I can give you my experience and expertise to say this is what I feel like if you start here, or maybe settle this, or pay this, or skip this. But everyone's plan is a little bit different. So definitely have a
Yeah,
plan in life, just like anything else.
exactly. Exactly. So I think they just need to review their current situation.
Hmm.
What have I done right? What have I done wrong? Now, where do I go from here?
Absolutely,
And
because life happens.
exactly. And I think the first most intimidating thing is starting that first conversation, and they're just so scared of it. So I always like to tell people, don't be afraid of it. Let's just break down what you need to do. Let's look at what you already have, and we'll get there sooner than they think, for sure.
Absolutely. Yeah, a lot of
Yeah,
times that's the case.
absolutely. Is there anything else you can think of that would help them, as they're, with each one of their life stages? Is there a certain thing you would suggest for someone as far as maybe how much money they should be holding back, things like that?
Yeah, so in our world, our underwriters love when they have a 2 month reserve. So using that word as reserve, if your payment's going to be 1450, then, they want you to have $3,000 kind of sitting in the bank. That's not
Gotcha.
always the case. Sometimes we've only
Hmm.
got 1 month PITI. So again, with the system based on, a higher credit score, you can get away with a little bit other things. If you've got a lower credit score, then, reserves are an amazing thing. Um,
Hmm.
if you've got documented RIT history, 12 months, they like to see that the last 12 months you've not had any late pays there. That makes a good backing for you being able to strongly pay your new mortgage you're stepping into. Um, assets, reserves, if your goal in the next few months or 2 years is to buy a house, maybe not go get the car payment with an $800 car payment.
Right.
Because that unfortunately cars are very pricey in today's world, and car payments are a huge reason why some people can't qualify. And that's sad and heartbreaking for me to tell them, like, hey, because of your $700 car payment right now, we can't qualify you for as much as you need price wise to fit your family.
Gotcha.
So that's disheartening because we all, everybody needs a vehicle. You need a stable one. So I get it. And again, that's why I like the term life happens.
Yes.
Um, but yeah, making the plan, just to, again, if you know your plan 6 months, then let's start talking now because realistically, we want you to start kind of taking in tunes of, knowing what to budget for, what your real payment's going to be, not just
Mhm.
a Zillow unmarked payment to where, it doesn't include all the good things.
Right.
And then another thing that I see people is, we all have fun subscriptions to things. Maybe cut back on some of your subscriptions. That's a great way. I even made a post about that this week to help you save money. I've got a cat and he's very loved. So we had the cat lady box for several months, but I was like, okay, I really can save this $30 here. So just the little
Right.
things that all add up, maybe one less visit to a Starbucks or something like that.
It really
But just
can add up.
it can add up. It can add up, and you can do it. If you want to buy a home, you can do it.
Yes, it's definitely about being focused for sure. I think too, a lot of things that I see with the younger ones is, get one of those, what are they called, secured credit cards
Mm-hmm.
where you keep it for 6 months, a year, 2 years, something like that. And then that really helps you, I think you use it and then you always pay the balance off every month. Am I correct on that? And you do it
Mm-hmm.
for a year or two, and that can really help them get further. And then obviously trying to layer that as they go, as they, get into other parts of their lives. So is it still um, the same thing where you have to have, if you're a W-2, you need 2 years tax returns? And what is the difference of that or being self-employed?
Okay, so correct. Your employment history is 2 years. So that's 2 years W-2s. If you are self-employed, it is a 2 year tax return, and we're going to use the net adjusted income. So you might have gross sales, but if you have some write-offs and depreciation, that bottom line, number 31 on Schedule C, that's what
Right.
is usable
Yeah.
qualifying income. There are some programs where you can get away with just a 1 month, or I'm sorry, a 1 year tax return.
Hmm.
But that's going to be for, higher credit scores and a bigger down payment. So
Gotcha.
probably 10% or more to get into that category. But yeah, so your 2 year tax return for self-employed, if you're a 1099, you run your own business, and or if you are the business and you file 1120 or a K1, that is
Right.
still a 2 year on the average. There are
Okay.
always circumstances, but 2 years on the employment history.
Good deal. So does anybody out there, do you have any questions that you would like to ask Amber?
I have one.
Okay. Go ahead,
Um,
Tate.
I know you kind of said it probably depends on the person, but how long would you say does it take to prepare for home ownership in general? Maybe just like an average number or whatever you can tell me.
Okay. So average would be 6 months. And that's just to go, let's just say you graduated from high school, you're at Ford, you've been working, but you never created a credit score. You never did any, you haven't had your first car was cash and it's still kicking and it's doing great, so you don't have a car payment. Um, from the time we open our first credit account, it will take you 6 months to get a score. So that's very important, again, to know if your goal is 6 months, 12 months, whatever, is we do want to create the credit. And again, I tell people, you don't need big credit. I don't need you to go buy furniture and have a big payment. But yeah, that little secured credit card, what a secured credit card is you give the bank your $200, $300 is usually what it is. They set it in the savings. So you're borrowing and paying back your own monies. And that's totally fine. That's just used and counted just like a real credit card. And you don't need three, if you get one and then, because it is hard sometimes to get the first one, because they're like, oh, you don't have any credit. And you're like, well, that's what I'm trying to do. So, I tell people, if your parent signed you up for your checking account when you were 16 because you got your job at Taco Bell, go to PNC and be like, hey, I do my banking here. I have my deposits here. Sometimes they'll do the secured credit card there. A lot of times I tell people Capital One online is pretty easy. Again, I don't care if it's a $200 limit, put 20 bucks on it and pay it off. And that's the other thing. We never want to maximize our credit accounts. People think they need to spend all $200. You don't. Again, it's about utilization and keeping the balance low. So it's just using it, paying it, using it, paying it. That's what the credit reporting agencies want to see. And that's how you're going to build the best score. Student loans get people, a lot of people's accounts are in deferment. So make sure you keep up with those. I think it's like every 12 months, you have to redo your paperwork to say, hey, I'm going to defer it, or, hey, let's start paying it. But yeah, just if the doctor's office sends you a little $30 bill in the mail and you don't pay it.
Well, we've got to freeze up for a second. Does anyone else have a question? Maybe we can at least let you ask your question. Maybe she'll come back here in just a second. Here you are. You froze up for a moment.
Oh, okay. I didn't see anything. Everybody was still moving. I lost my train of thought now, but
that's okay.
But yeah, so to answer your question is sometimes you're already ready, and sometimes I'm like, all right, here's 6 months if we're completely starting fresh.
Okay, good deal.
But job time is huge. Like there's no give or take on that. It's 24 months. And I had a client, he literally had to wait till like one day next for us to start our application for one day.
Wow. Oh my goodness.
Thank you. I have one more kind of, so like me, I have no credit history myself. So I know you were saying, would you say the best way to start that would just be with one of those secured credit cards with my banking or Capital One?
Yeah. Or if you're a student, when all of my kids turned 18, I opened them up a Discover student card online. Super easy. And Kohl's used to be pretty easy. Go into Kohl's, apply for a little credit card, buy a pair of socks. Again, I don't need you to spend a lot of money.
Don't max. Yeah.
But yeah. Just something. I mean, pretty much anywhere. You can't go somewhere without using their card, right? To get all the discounts and the better pricing, which was what gets us Americans in the debt problems we are. But yeah, definitely, Tate. If you need any help with that, just reach out. I'll be happy to help you and maybe give you some examples of some things.
Okay. Thank you very much, Amber.
You're welcome.
Yeah. Does anyone else have a question?
I do.
Okay.
What down payment options are there?
Okay. That's a great question. Yeah. So in Kentucky, we have an entity called Kentucky Housing Corporation. They have an assistance program to where you can borrow up to $12,500 to use for down payment and closing costs. Using that program, it's amazing. We get a lot of people into their homes for just their, what they put on their deposit on the contract. Every once in a while, there are some local banks that run some grant programs. That's usually the 1st of April. A lot of things are based on income and counties, but the incomes are pretty lenient that a lot of people fit within the mold. So I do a lot of Kentucky housing loans every once in a while. Also in March, they came out with a 2000 grant. So the 2000 part wasn't paid back. It was just an extra little something to help you with. But 90% of the year, other than just the spring when those other programs come out, we use the KHC program for the entities. Every once in a while, like if you work for Norton's, check with your employer. They have a $5,000 grant that's not paid back after you work for so many years. But there's not a lot of free assistance. There's some programs with Louisville Metro You have to go to Louisville Metro, which again, I can give you the contact for that. You do your classes and things with them, and then they come back and say, okay, here's your certificate. This is how much we would give you. And then on the loan side, we work backwards to make sure we're meeting all of their criteria to tell you what sales price you can buy and use their down payment funds.
Good deal. Good
But the
deal.
Metro program is a good option also.
Yeah, I've done that a couple of times, and yeah, it worked very well. Does anyone else have a question? Everybody good? Well, I think what we're saying here, long story short, the first step is a plan. So definitely, you don't have to buy today, but get yourself in order, right? So speak with a lender, review what your current position is, and then definitely create that 3 to maybe 12-month plan. And it really does get there faster than you know, for sure. So again, we don't have to have everything figured out. You just have to kind of know what your next step is and then just move forward from there. But we really do appreciate you joining us today. And thanks again for coming. And as always, I like to say, because next matters, it really is important to have your plan. Thanks so much for coming, everybody.